SoFi investors, can SoFi stock actually 2x, 5x, 10x, 20x? There's tons of YouTubers out there saying we're going to 10x, we're going to 5x, we're going to 20x, we're going to 50x. But how is that actually done? How do we get from $7, $8 a share to $20 a share, $30 a share, $40, $80, $160 a share? How do we actually get there? We have a market cap right around $8 billion right now. So a 10x means we have to have an $80 billion market cap. So I'm going to show you in today's video, how do we get there in each one of these scenarios, right? How much revenue, how much profits, compared to some actual banks that are making that kind of money and have those market caps today. Stick around. All right, SoFi investors, it's been a very exciting past week. The stock is up over 20% in the last 5 days. It's been, under 650 to up over 750. Closed at 775 today, down to 774 in after hours. The 52-week low is right around $6. The 52-week high is around $11.70. So we almost need to double up from the low to get back to the high. Where do we go from here? And how do we get to these crazy numbers that everyone's talking about, right? There's right around a billion outstanding shares. So if we're at $8 a share, then we're going to be at an $8 billion market cap. If we have a $10 stock price, we're going to be at a $10 billion market cap. The biggest bank in the world is around $600 billion in market cap. But luckily for SoFi and its investors, there's tons of banks. There's local banks, there's regional banks, there's national banks, there's international banks. There's a lot of different banks that SoFi can continue to steal market share from. I'm really excited with this price action over the last few days. Earnings is like 2 weeks away. We're getting closer and closer and closer to earnings, and there's a lot to get to for earnings. So make sure you subscribe to the channel. I'm going to break down my thoughts going into earnings as we get closer, and then break down the earnings once Anthony Noto and his team announces what's going on with the company. Are we profitable again for another quarter? Hopefully we are. So now what I want to do is I made this little chart of all the different banks and their market cap range. So let's compare SoFi to where they're at today and where they could potentially go 1, 2, 5, 10 years down the road. All right, SoFi investors, if you take a look at the screen, I made us a little chart mapping out all these different banks, both international and American banks, and their market caps, right? A 2x from here would be in that $15 billion market cap range. I didn't list any of those banks because I didn't think it was really necessary. A lot of the banks under $15 billion are mostly new banks, small banks, regional banks, local banks, and SoFi has a lot bigger aspirations than to be just a local bank, right? So in order to 5x from where we're at right now, I just made an even $8 price. We're right around $8. So to 5x from the $8 range, we would have a $40 billion market cap and around a $40 stock price. If you take a look at all these banks listed, in this range, it's a lot of international banks, except for NY Mellon. That's the Bank of New York Mellon. Around a $48 billion market cap. Another bank you might recognize is Barclays. They're a UK bank. But it's a long ways from here, guys. A long ways, right? We're about an $8 billion market cap. All right, now let's investigate this Bank of New York Mellon stock a little bit more. It's got that $47.98 billion market cap, which we just saw, a PE ratio in the 15s, earnings per share, trailing 12 months, around $4.22. If you look at SoFi, we're still in infancy, right? It's still the trailing 12 months. We're still at negative EPS. So it's hard to really compare them because a lot of these numbers are based on TTM, which is trailing 12 months. So back here, it's got a 1-year target price of $70. So not a ton of growth there, but we always want to look at the earnings per share and we want to take a look at the revenue, right? Here's the revenue, 15 billion, 16 billion, 16 billion, 17 billion, not a lot of growth there, right? So that's why a lot of these banks are valued the way they are. Actually, the PE ratio is a little rich with this kind of growth, but the earnings are okay, around $3.5 billion. pretty much the last 4 years, right? And here's the strong buys, holds, and underperforms. A lot of people like this stock, right? It's a little mixed, actually. But they're beating on EPS each and every quarter. So it looks pretty good to me, right? This company's in pretty good financial health. You always want to go to statistics and kind of see what's going on with the company. This way we can kind of see, are they expecting more growth? The PEG ratio under 1 is always good. Possible buying. Forward PE at 12 this could be a potential good buy stock. Operating margins 33%, profit margins around 20%. The return on assets and return on equity aren't quite as good, but the revenue over the last year has been around $18 billion. Now let's compare that to SoFi stock, right? We go down to the revenue, $2.24 billion. So we got a little ways to go. This company is about $18 billion. We're around $2 billion, right? So we got a little ways to go to get to that 5x range, right? So now let's take a look at the 10x. I mean, everyone's saying the stock's going to 10x, 10x, 10x. It's going to take quite some time for us to 10x, guys. Some banks you might recognize on this list, the TD Bank, Toronto Dominion Bank, and most of these are foreign banks as well. But we can take a look at TD Bank, a bank that most of us here in America are familiar with. They're based in Canada. They have a $140 billion market cap. So that's, when we look at the Bank of NY Mellon stock, it's significantly more than this $48 billion, almost 3x, right? So the market cap is significantly better. Earnings per share is coming in around $6. This stock's trading at 13 PE. And then we look at the financials, right? Annual growth of revenue, there's growth here, right? I like this stock a little bit better. There's growth. And then 2023, the stock had a bad year. They must have had some bad loans or something like that. I would have to look into that a little bit more. But from 2020 to 2021 to 2022, it grew really, really well on the bottom line, right? So this stock is doing pretty good, a mix of buy and sell alerts. We're going to go over the statistics and kind of break down and compare them to where SoFi is. Their revenue is $2.2 billion. This company's revenue is $51 billion, right? Total cash, $545 billion. Total debt, $475 billion. So they have a little more cash than debt, which is always good. And a lot of these big banks that have been around for a while also pay out a dividend, right? So the profit margin, 21%, operating margin, 30%, all really good numbers. Return on assets, I would like to see that a little bit better, and return on equity is a little better than the other stock we just looked at, right? So to get to these numbers, to 10x, it's going to take years. It's not going to happen in 2 years, guys. It's just not going to do. It's just not going to go. It's not going to fly, man. So anyone can be like, oh, the stock's going to 10x, it's going to 20x, it's going to blah, 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 blah. Maybe in 5 years we could do that. Maybe in 6 years, 7 years down the road, right? We got a long way to go. And then a 20x from here, $160 billion market cap. Goldman Sachs is the stock I want to look at just to see. This would be a $160 stock price. In a perfect world, in a perfect scenario, a decade from now, maybe we're looking at Goldman Sachs out in the distance. But this stock, $160 billion market cap, earnings per share, 31. You got to remember, when you look at earnings per share, SoFi has 1 billion outstanding shares. Goldman Sachs has like 300 million. So that's always going to be very significantly different, just so you guys know. But if you look, the earnings are all over the place. The revenue is not consistent. The profits aren't consistent, right? So that's why a lot of these stocks, if you look at PE ratios, kind of trade a little on the cheaper side. I actually think Goldman Sachs for that growth is trading a little bit rich. But let's just take a look at the overall business, right? Revenue, $50 billion in revenue. SoFi's currently at 2, right? So just for some perspective, actually, TD Bank has a ton of revenue, right? For their market cap and the size of their bank, $50 billion, right? So we are far and a ways off from this $50 billion in revenue situation. A lot of cash, $728 billion, $637 billion in debt, which is great. They pay a nice dividend. Payout ratio is under 50%. 35%, which is pretty good. So in order to increase the bottom line, we got to increase the top line. So we got to get more money coming in. We got to diversify these income streams. Things are going to get a little crazy. And then these are the biggest banks in the world. JP Morgan, Bank of America, 600 billion, 345 billion, all the way down to, Bank of China, Morgan Stanley, and Goldman Sachs coming in at number 9. Right. So, look at these market caps, guys. The biggest banks in the world are in America and in China. If we take a look at SoFi Technologies, it's nice. We got more cash than we have debt, which is really, really good. I always like to see that. The short interest is pretty high, but for young companies, sometimes that's kind of just what happens, unfortunately, right? Quarterly revenue growth year over year, 37%. So let's compare quarter over quarter revenue growth from these other types of banks, right? Revenue per share, quarterly revenue growth year over year, 3%. That's pretty terrible. 3% is pretty terrible. If we look, quarterly revenue growth, not even 1% for TD Bank. And then let's take a look at Goldman Sachs, guys. Quarterly revenue growth, 21%. That is an epic number. And that's why they have that ridiculously high market cap compared to these other banks. Because they're big and they're still growing year over year. We'll have to see how SoFi continues to grow over time. If they can remain growing year over year, quarter over quarter, 20 to 30% for the next 5 years, we can make significant headway on 2x. And I think we'll easily 2x. I think we will definitely 5x in the next 3 to 5 years. But to 10x and to 20x, SoFi has to become a national and international brand. It's not going to be easy. It's going to take a decade, if not more, to get that 10x or 20x, in my opinion. So I just wanted to give you guys my opinion on will SoFi 2x or 5x or 10x. I think we 2x in the next year or two, 100%. And then 5x in the next 3 to 4 years. And then anything after that, we're going to have to gauge how the business is growing year after year, quarter after quarter. If we acquire any other banks or businesses, a lot can happen. I'm not going to project out 10 years or 5 years. I think 1 to 2 and 3 to 4, I think we can 5x in 4 years. I think that's a possibility, especially from that $6 price that we were at earlier. A 5x would be in that $30 to $35 range. I definitely think that's doable. All right, SoFi investors, thank you so much for tuning into this video. If you like my content, please consider subscribing to the channel. We're closing in on 1,200 subs. Thanks to you guys. I appreciate you taking time out of your day to check out my SoFi videos. We'll catch you on the next video. Peace.